Hi, everybody. This is Gary Dean, and this is our nightly video report for Monday, February 6, 2017. Not really a whole lot has changed today. We had a little bit of backing and filling, but nothing really out of the ordinary after a big move up on Friday, and we're really just in this waiting game. I still believe that there's more points to the downside than the upside. One thing I was warning about was that they were going to come and close the gap, which they did, and they took it a little bit higher. So they may try for new all-time highs, but the thing is, it's going to be struggle to get things higher. And once everybody is in and nobody thinks that the market's going to go down, if history is our guide, that's typically when they pull the rug out and they catch everybody, people too long the market and not enough people that are short the market, and from there we get drastic moves to the downside. So I do believe that's coming. When it could be, start this week, it could start next week. It's a waiting game, and it's a frustrating part for, and really a lot of the traders, because you're waiting for the bigger move to come down. It's very similar to something like this, right where we are, where we had to move up, and then we had chopping. Nobody thought it was going to go down, and then we had a massive move to the downside. So we're in that. It's a little bit not as drastic, but I do believe that's going to be coming. Where it's going to be expanding the range, and we're going to get the moves to the downside and the upside, and eventually it's going to just sink to the downside. But it's all a matter of when that's going to take place. Are they going to have to try to make a new high? Like I said, I thought it would have been better to come down to the 50-day moving average. But if we take a look at the 60-minute chart, you can see the buyer stepped in at the 200-day. We have bearish divergences. We have bearish divergences on the daily. So this is, one of the things, like I've been saying, is that this gap was going to get filled. It got filled. We still have a ton of gaps on the downside, and eventually they're going to come down, and they are going to get filled as well. And, the last one is all the way down here, which is the 2094. Now, is that where it's going to go? The market will let us know what it's going to do. But it's, when we see these types of extended moves, yes, typically they do get get filled. But that's not really the trade I'm going for. What we know, we have 5 waves up. Whether this is the 5th or they need to make another 5. After this completes, whether they did already and they're just testing the highs, or they're going to make a little bit more high, the bigger move is going to come down here, and it's going to retrace anywhere from 50 to 78% of the of this entire move up. So that's where I keep saying, yeah, it's a frustrating thing because you really want things to just break down, but this is the topping process that happens, and the tops are not easy. Bottom lows are easy because they give you the V shape there, and once you get in, you just kind of have to just sit back and enjoy the ride. With tops, you're going to get these moves down, back up, down, and it takes a while before it actually rolls over. So like I said, either they're going to head a little bit higher, this is the wave 5, or we made it and they're just testing the highs. But we're going to get the move to the downside, and that's why I'm kind of was just trying to control the emotions when we were down here, saying, they're probably going to come up and close this gap, which, they did. So nothing has changed. I still believe we're heading a lot lower, but it still may be a little bit more of a frustrating end of things. So on Friday, we gapped up and then made it above the 78% retracement. We're now back below that. We had bearish divergences. They burned off a little bit of the extreme overbought conditions, but nothing really major. And if we just take a look at the 5-minute here, what we want to just take a look at is where did the retracement come to here? So if we just kind of draw our fib lines, which would be right here, you can see we made it down to the a little bit, almost to the 38% retracement. So if they're going to head higher, they're probably they have to just get it above this 22.95 level. If they do that, then they may come up and get into this 22.96 level. What the bears need to do, honestly, they have to get it below today's lows. If they do that, then they're probably coming down and closing the gap. If the bulls head up, then we're probably heading up to this 22.97, 22.99. or possibly even testing these. Now, if they get through it, that's when we start looking at the 2307 area. But like I said, even if they get up there, the bigger move's going to be to the downside. So you want to use any strength to just short. So um, there's really about all I have. Nothing's really changed today, even with the little backing and filling. Don't get complacent. The bigger move to the downside is coming. It may take a week or two. We'll have to wait and see. But this is all part of the topping process. And that's about all I have for tonight. So with that, have a great night, and I'll talk to you guys tomorrow.